Hey everybody, it's Mark Yegge. So happy that you're here today. Hope you're having a great week and a fun week. I am just getting finished with a trip to the British Virgin Islands where I went sailing for a week with friends. I'm telling you, it was a blast. So now I'm kind of holing up in a hotel, doing some calls, talking to you. Hope you're doing fantastic. Let's get into what's going on this week. It's been kind of a crazy week. If you're in some of the stocks that a lot of our mastermind group members are in, and it's been fun, but we are in a yellow market. So we turned yellow yesterday. We got 3 green lights that you see on the screen and 1 red one, but it's a little bit of an anomaly. We're in a yellow market, which basically means just be careful. Like a yellow light, you don't want to slam on the brakes, but you don't want to slam on the accelerator either. You just kind of be careful going through that intersection. Let's take a look at the big markets here. The NASDAQ composite, you can see it's been a wonderful looking market for a long time. It came back and it filled some gaps earlier this week. And, it's showing a little bit of weakness. It gapped down on high energy, high volume. So there's a little bit of trouble left in this bull market now. So I think people are getting a little skittish. We got a downgrade from Moody's, the U.S. economy to AA+ or blah, 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 something. Doesn't really matter, but people use everything as an excuse to sell. And the NASDAQ, still pretty solid, but it's yellow. You can see it's yellow. All right, the Dow Jones, the same thing. It's actually looking a little bit stronger, but it's yellow. You can see that it's yellow. It's kind of come down for 4 or 5 days and doesn't really know which way to go. But the New York Stock Exchange composite is down a bit more than the others, and it's down on some good volume. So you got to watch this one. I suspect a lot of these markets are going to want to go down and test their 50-day moving average over the next couple of months. But I don't know if it does it with energy, which it doesn't look like it's doing it now, then that's a problem. But if it just kind of makes its way down there and meanders around, I think we've got a decent market in place. We've been in a bull market since January 9th, so there's bound to have been some sell-offs. All right, the volatility index, you can see it. It's a reversion to the mean index. It reverted to the mean this week and went to that red line, that 50-day moving average. And now it kind of spiked up and it's back down to that 50-day moving average. Still pretty low relative to where it's been. Near its all-time lows for the year for sure. The oils are doing really strong right now. You can see the oils are kind of in a death trend, but they've broken back above the 50 and back above the 200-day moving average. All very bullish. There's stuff going on in the world. There's stuff going on that's making supply issues on oil a little bit scarce. When you get supply issues, prices go up, right? And that's just what happened. When you get any supply squeezes, it creates prices going up. So the oil market is doing well. So are the oil stocks. And I got to tell you, I'm going to show you 2 charts here on the Treasury. There's something going on, guys. There's a destruction of a 40-year bull market that is almost, I don't know if it's almost finished, but certainly past the midway. It doesn't really matter where we are. It's a destruction of the Treasury markets. And, my dad saved all his money so that he could retire and put money into safe markets like treasuries, and he could get 8% a year. And the treasury markets are just selling off, and they've been selling off for a couple of years now. And I suspect that's a reflection on the United States economy as a whole, the political system, the economy. We got a kind of a shit show going on in the world right now, certainly in our country, in the U.S. And there's a lot of things that are changing. This happens in the later stages. If you ever read the book by called The Fourth Turning, things start to happen in the later stages that are really weird. It's just, and they're cyclical, right? They happen kind of in 4 tranches, 20 years apiece. We're in the 4th tranche, which started about in 2008. We're kind of running into the end of this weird time where things kind of just change. And we're seeing all kinds of stuff societally and politically and culturally. And I don't like it one bit. I don't know if you do, but I don't like it. Anyway, so you're seeing it. The financial markets reflect what's going on in reality. And they do it in real time, and they do it also forward looking. So the markets generally trade out about 12 to 18 months. What's happening in 12 to 18 months? Well, we got an election. The markets are telling us that there's some weird stuff going to happen in that election. Maybe, who knows? But this is weird. Look at all the gap downs this week on the Treasury market. This is the Treasuries. These are supposed to be like normal. and it's gapping down and doing weird stuff. Anyway, okay, enough of that. Look at the weekly though. Look at where this was. It hit 180 and it's now down below 100. That's an 80% drop in 3 years. An 80% drop in 3 years on something that's supposed to be the safest asset in the world. There is trouble in the United States monetary system. Big time trouble. And you're seeing it in this chart. This is the weekly. All right. So didn't mean you want to be the doom and gloom guy. So I'm going to show you the positive side of some of that. Look at this chart for the Philadelphia Housing Index. This is basically saying housing is not in trouble like everybody predicts, right? That's why you got to not listen to predictors. You got to listen to yourself. Listen to common sense. Let me tell you what I think. You don't have to listen to me either. But the Philadelphia Housing Index is reflecting optimism. Why optimism? Well, think about it. A couple of years ago, when you went to get a mortgage, it was 2.5% interest rate. Today, when you go to get a mortgage, it's 7.5% interest rate. So what are people doing? Well, if they don't have to move, they're not moving. They're not buying a bigger house. They're saying, well, if I go refinance my house, I'm going to pay 7%. If I sell my house and go move, yeah, I could sell it here, but I'm going to spend more there, and I'm going to pay 7.5% interest. And who knows when it's going to come back down, if it ever comes back down. So people aren't moving. What's that doing? Less inventory on the market. Less inventory on the market, the prices stay high or go higher. We've got inflation going on, as you know, right? And if inflation goes on, prices go higher of things. So people aren't going to sell their house lower. They're going to wait and let them go up. So the markets are responding by saying, hey, let's build more houses. And so that's what's happening. The housing index is driving up. It's a little bit of common sense. That's the way I read it. There's somebody on the other side of this video that can probably read it a different way, but that's just the way I kind of read markets. I kind of talk through them like this, like I'm doing with you. So I hope that makes sense. All right, let's see. We had some movement this week. There's your Tesla gap down on earnings last week. It still is kind of consolidating and testing that 50-day moving average. And the last one, Apple had its numbers last night. You can see the big candle on the right. This has been a gorgeous chart as you've been listening. If you've listened to these market updates every week, it's been like a model chart. Well, every stock is cyclical over time, right? They don't all go straight up in a line. That was a beautiful straight line for Apple until yesterday. Even though they beat earnings, they beat sales, there were still some reasons to sell it off. And it's selling off on fairly high volume today, going down and testing that 40-week moving, that 10-week moving average on this weekly chart. And I'll show you the daily chart, and you can see a big gap down on good energy, good volume on earnings per share. That's not that great. They're still Apple, right? They're not going anywhere. It's just they're not growing the company as quickly as they can because they're a $3 trillion company. So what you're seeing is a slowdown of that robust growth that we've had. And the markets and the charts are showing it. All right. Listen, I hope you were safe on the Apple. If you were one of the people that owned it, you protected yourself. We show you ways to protect yourself in our cash flow machine program. If you want to know more about that, you can find us at cashflowmachine.io or go to our YouTube channel or Covered Calls. But anyway, listen, I hope you have a fantastic weekend. If you can get out and enjoy some of the rest of the summer with your family, the people you love, please do it. Have a great time. And I'll see you next week on next week's weekly stock market update. Take care. Peace out.